So Coinbase went public a couple of weeks ago. After much anticipation, the crypto company went live with a share price over $400. Since then, it has dropped back to $300. So, is now the time to buy Coinbase shares, or should we wait further? In this video, I'm going to take a look into what Cathie Wood thinks on this, and I'm going to share what I'm personally doing with my portfolio. Hi and welcome back. My name is Tom Heavey. I hope you're doing well. So for those who don't know, this channel used to be 100% focused on cryptocurrency until around this time last year. Crypto has been my passion for many years and the focus of my investments. So Coinbase going public was huge. At the same time, I haven't purchased a single share since they went public, and I'm going to explain why shortly, but first, let's hear what Cathie Wood thinks about Coinbase. Now, to be transparent, this interview with Cathie was from earlier in the month, but everything she discusses here is about long-term investing with a minimum 5-year time horizon. So other than the share price, her perspective should be exactly the same today.
Do you have a price target for Coinbase?
We do. I am reticent to give it. It is far above where it's going to open, we think. Now, there are a lot of assumptions in there, and you want to talk about volatility, just look at a chart of Bitcoin. There's going to be great opportunities between now and 5 years to buy on dips, we believe. I have no idea where it's going to open. We were trying to figure that out ourselves today. We do believe, however, that it has miles to go because institutional interest in Bitcoin alone, which is the largest crypto currency out there, is, we think, going to add up to $500,000 to the price of Bitcoin. And when I say that, we've based this on a study focusing on what institutions are looking for. They're looking for low correlations of returns. This is a new asset class. So institutions are interested, they are moving in, and if they add up to 5% in their asset allocation to Bitcoin, that alone could be up to a $500,000 increase in the price. So we're at the very beginning of what we believe is going to be a long and exciting journey.
So Cathie is clearly bullish long-term on Coinbase. While she doesn't give an exact price target, she does share that she believes Coinbase is undervalued based on where it was due to open. Now later in the interview, she mentions this as around the $250 to $300 mark. So these comments are applicable with today's price. So let's take a look if her and ARK have been investing. As we can see, ARK's main fund have been loading up on Coinbase's shares. In fact, they've made new purchases on every day that the markets were open between April 14th and April 23rd. In total, at today's prices, they now own $532 million worth of the crypto company's shares. And that brings Coinbase all the way up to 16th position in their overall holdings. And in the next clip we're going to hear from Cathie's interview, she talks about how they plan to use Coinbase's volatility to pick up more shares along the way. So the fact that it's already 16th in their portfolio when they plan to buy more in the future shows how bullish Cathie really is. Now, with all of that said, let's hear more of her thoughts.
Okay, let me see if I can prod you a little bit more to give us specifics on a price target for Coinbase. You're reticent to maybe give us a number, but can you give me a ballpark on the percent gains that you think you could see, using your 5-year approach?
This is well above our minimum hurdle rate of return of $15, even if it does open, a 15% per year, even if it does open as high as $250 or $300. Even at those prices, given our assumptions, now again, we expect tremendous volatility in this. It's going to be unstable in terms of investors and analysts understanding what Coinbase actually is. It makes most of its money on the trading of Bitcoin and Ether. Those are the two biggest, and it's going into a lot of other cryptocurrencies and crypto assets. So it's got a lot of open-ended opportunities, but right now they're making about 70 basis points on each trade, on each dollar traded, and we think there will be fee compression, as there always is in the institutional world, and as competition increases. So I think the opportunities in this stock, to the extent there are dips out there, will come around the idea of, oh my goodness, how much is competition going to drive these fees down? And we do think the compression will be to 50 cents within the next 5 years, or 50 basis points. So you'll watch the dynamic: volume explosion, fee compression. Again, we'll pick our spots around volatility.
So it sounds like you're saying this could be a more buy the dip opportunity, and that you wouldn't necessarily be chomping at the bit to get in at the IPO price.
Well, we're not allowed to say what we are or are not going to do at any point in time. You'll see our trades at the end of the day. And so you'll know what we've done, but we can't tell you what we're going to do. But if you do watch our trading, what you'll understand about ARK is we're extremely opportunistic. We'll buy the dips, and we are also at the same time very optimistic about how far Coinbase has to go in terms of delivering returns relative to our 5-year target. So stay tuned.
All right, stay tuned. Does it have 4 digits or 5 digits, the price target?
Well, if we're right on where Bitcoin is going, just Bitcoin alone, based on institutional investors getting involved and based on institutions diversifying some of their cash into Bitcoin, it has a lot of room on the upside.
So Kathy mentioned the compression of fees in there, and that's a major point. You see, today, over 90% of Coinbase's revenue comes from one source: trading fees. While Coinbase might offer a whole suite of different services, it is the fees they charge per trade which brings in most of their money. Now, if we take a quick look at Coinbase's revenue, we can see the first quarter of 2021 has witnessed explosive growth. In fact, Coinbase has made more money in the first quarter of 2021 than all of 2020 combined. And what's interesting is that the balance between institutional investors and retail investors is changing over time too. Here we can see the total trading volume on Coinbase's platform. The light green represents the retail investors, and the dark green is the institutions. If we go back to 2018, we can see around 90% of trading volume was dominated by the retail investors. Over time, however, the institutional share has grown, first overtaking retail investors in the second quarter of 2019, and then by the last quarter of 2020, institutional volume had grown to comfortably over 60%. And this goes back to something I have been saying to you for years on this channel. Institutions are getting into the cryptocurrency markets. It's the least correlated, highest returning asset class in the world. Now, if you understand modern portfolio theory, you'll know this makes cryptocurrency the ideal diversification play. This is exactly what I said back in 2018, and it's even more true today than ever before. Now, the reason this is big for Coinbase is because Coinbase have a reputation for security. They've never lost any of their clients' money, and they've always worked closely with the regulators to make sure they are compliant with the law. While many crypto exchanges have opted to circumvent the rules and don't use the best security practices, say what you like about Coinbase. For an institution looking to get into cryptocurrency, Coinbase are the first place they go. Just look at MicroStrategy and Tesla as examples. So as institutional interest in Bitcoin, Ethereum, and other cryptocurrencies grow, that means the opportunity for Coinbase to act as a bridge between traditional finance and crypto also grows. Now, the counter argument to this is that just like with stocks, fees will eventually trend to zero. So if Coinbase is relying so heavily on fees to make money, it doesn't take a genius to work out how this doesn't bode so well for the crypto company. Now, Kathy notes this point in her interview and says it will cause volatility as investors buy into this narrative. However, she believes that the fees will only compress from 70 basis points to 50 basis points in the next 5 years. A compression, yes, but not as much as many people think. Why? Because Coinbase's reputation is so strong in an industry where so many others have taken shortcuts. So with all of that said, am I buying shares or no? For those who have been following for years, you'll remember this interview with Cityblock Capital all the way back at the bottom of the bear market in February 2019. In that video, I shared that I was personally investing into them, and thankfully, many of you did too. Well, Cityblock managed to get into Coinbase very early and got us shares at the incredible price of just $36. Now, I've made a lot of terrible predictions over the years, but thankfully, it looks like this one is going to turn out well. By the way, if you don't want to miss future opportunities like this, make sure you are subscribed. So, the answer is yes. I do, of course, hold Coinbase shares. However, I haven't bought a single extra share since they went public, and I have no plans to do so. And if I wasn't already invested, I would not buy shares today. I know, I have every incentive to talk up Coinbase and say you should buy shares today. After all, that will contribute to my shares rising in value. However, to tell you the truth, I wouldn't invest in Coinbase today, and the reason is this. As I shared recently, around 20% of my portfolio today is invested in cryptocurrency. It has been higher in the past, but I've been diversifying recently. Now, the remaining 80% is invested in a mix of disruptive technology stocks and passive investments across the world's biggest stock markets. So when I look at Coinbase, I see something really quite odd. Technically, it fits into the category of stocks, so it should fall into the 80% of my portfolio. However, Coinbase's revenue is very correlated to the price of Bitcoin, Ethereum, and crypto. If Bitcoin rises in value, Coinbase signs up more users, they process more trades, and they make more money. If Bitcoin drops, the reverse happens. So even though Coinbase is technically a stock, it's much more correlated to crypto than it is to stocks. And that means if I want to buy shares but keep my 80-20 balance intact, it makes more sense to take money out of the 20 in crypto and move that into Coinbase shares. So the question of whether I want to invest into Coinbase isn't, do I think Coinbase is a good investment or not? The answer to that would be an emphatic yes. But no, the question is, would I like to sell some of my crypto holdings in order to buy Coinbase? And the answer to that question is no. Now, there is a slight nuance I want to add here. If you were to ask me which would I rather invest into for the next 10 years, Bitcoin or Coinbase, I'd say Bitcoin. I'd also add Ethereum in there too, but the point is, I would be buying the cryptocurrencies directly. So when a friend asked me the other day if he should buy Coinbase shares, this is what I said to him. I said, just buy Bitcoin instead. Don't touch it, don't trade it, just wait. However, he still isn't sold on buying crypto directly, and the thought of owning a share in a company is just easier for him to get his head around. And I do understand that for people who haven't been in crypto for a long time. So in his case, I told him that he'd be better off owning Coinbase than owning no crypto related investments at all. If he won't buy Bitcoin, he'd be better off at least buying Coinbase. So for me, what it comes down to is that Bitcoin beats Coinbase. But if someone really doesn't want to buy Bitcoin, then Coinbase is better than holding no crypto at all. So I hope that makes sense. I'm personally a fan of Coinbase, and I think the company has a really, really bright future. However, I wouldn't invest at today's prices just because I'm still more bullish on crypto as a whole, and I don't want to move money from those investments into Coinbase. Again, as someone who is invested already, I have every incentive to say the opposite, but that is the truth. Now let me know what you think in the comments. In fact, just comment the word Bitcoin or the word Coinbase to share which you think is the better investment. Or comment both if you're invested in both. Thank you for watching. I will see you again very soon.